Welcome everyone to this real life trading video on what is the market maker and how does it work. Today is October 12th, 2018, a pretty wild, crazy day in the market. We've been day trading and yeah, just had some questions on market maker, how does it work? So let's record a video and talk about it. My name is Brad Reed and I am a real life trader and I would like to encourage you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. So the market maker is the person or computer that fills your orders. When you put in an order to sell, the market maker is the one that actually does the selling. So a lot of us have a broker that we type, a website that we go in, we call our broker and we type the order in on the website, or maybe some people call someone on the phone, or I know my dad sometimes likes to go into the Fidelity office and talk to a real life person. Either way, a broker is the person that takes your order, and I'm going to simplify this for a little bit, but takes your order and presents it to the market maker. So imagine the market maker as an auctioneer, right? And let's say at this auction, there are going to be, they're going to sell 40 Ford F-150 pickup trucks, and they're all the same. And I have no idea what a Ford F-150 pickup truck goes for these days, but let's just say with the option packages on all these trucks, they're all at about $20,000, right? So the market maker stops. The market maker is going to take 5%, right? So the market maker, the auctioneer, is going to get paid for doing the work of selling these trucks and auctioning them off. But there's a bunch of buyers and there's a bunch of sellers, and the auctioneer says, all right, who wants to buy a truck for $18,000? And a whole bunch of people raised their hands. It was like, okay, who wants to sell the truck for $17,000? Because the market maker is going to take $1,000. No sellers raised their hand. All right. Then the market maker says, what about $18,500? And there's a lot of buyers that have their hands up, but no sellers. So then you said, okay, what about $19,000? And there's 20 people that say, I want to buy that truck for $19,000. And the auctioneer says, okay, do any of y'all want to sell it for $18,000? And 2 people raise their hands. So the auctioneer says, sold. And 2 trucks get sold to buyers for $19,000, and the sellers got to sell those trucks for $18,000. And the market maker, the auctioneer, took $1,000 per truck and says, okay, now are there any other buyers that want it at $19,000? And there's 18 people with their hands up, and says, all right, are there any sellers that want to sell that same truck for $18,000? And there's one guy that's like, you know what? I'll take that deal. And says, raises his hand. Okay, boom, another truck gets sold. And so the auctioneer says, okay, sold. And the person sells the truck for 18 to the buyer for 19, and the auctioneer keeps $1,000. And then the auctioneer says, does anyone else want to buy a truck for 19,000? And now everyone's like, man, those trucks are going for 19,000. Yeah, now there's 30 people that want to buy the truck for 19,000. Anyone want to sell the truck for 18,000? Nope. So it says, all right, how about 20,000? Does anyone want to buy this truck for $20,000? Now the buyers are like, man, the price is going up. If I'm gonna buy this thing, I need to get in on it. And so now you got about 30, 35 people that are raising their hand saying, I want to buy that truck for $20,000. The auctioneer says, hey, does anyone want to sell it for $19,000? And 10 people raise their hands. So boom, we got 10 trucks that are sold to buyers. And the auctioneer is now saying, all right, does anyone else want to buy the truck for $20,000? And there's a whole bunch of people raising their hands. Does anyone want to sell a truck for 19? And the sellers are thinking, man, this thing's going up. No, I'm going to wait for up there. Now the market maker's got a bunch of people that want to buy trucks, but doesn't have anyone that wants to sell the trucks. So in order to make it more attractive to the sellers, the auctioneer is going to raise the price. And let's say he jumps up to 22,000, and the auctioneer says, okay, I got a truck. Who wants to buy the truck for $22,000? And a couple of people raise their hands, and he says, who wants to sell it for $21,000? And you got a couple of people that raise their hands. Okay, great. Boom, we sold some trucks. But now the buyers are like, man, I don't want to buy it at $22,000 because just a while ago I could buy it at 19. And so the market maker says, okay, who wants to buy the truck at $22,000? No one's raising their hand. Says, oh, well, let me lower the price of the truck to $21,000. Anyone want to buy the truck for $21,000? One person raises their hand, says, all right, does anyone want to sell the truck for $20,000? And there's about 10 sellers at that, but he says, boom, one truck sold. And then he lowers the price again because now the buyers don't want to buy it because the price was too high. So that's what the market maker is going to do. The market maker is going to raise and lower the price of the stock until he or she or it can find an agreement between buyers and sellers. If there are a lot of buyers but not enough sellers, then the market maker will raise the price of the stock until there are sellers that want to come in and sell at the higher price, and then they fill the orders. And if there are more sellers than buyers, then the market maker will lower the price of the stock until there are people that want to buy so that they can exchange. So here's the thing. The market maker is not ever taking possession of the stock. All the market maker does is just connect a buyer and a seller and exchange them, just like the auctioneer. The auctioneer never really takes control of the trucks or the pieces of art or whatever's being auctioned off. The auctioneer is just helping the buyer and seller agree upon a price. Now, just like in the example about the trucks, the market maker or the auctioneer is going to get paid for doing this. And so the buyer is going to pay a little bit higher price than the seller because the market maker is going to take the difference. Now, if you look down here, in TradingView, there's a little pink number and a blue number, and the pink number is the ask, and the blue number is the bid. If you are going to buy a stock, and in this case we're looking at Netflix, you will be paying the ask. If you are going to sell a stock, you will be selling it at the bid. You will notice that always, all the time, the ask is higher than the bid. And the difference between those two prices goes to the market maker. Questions in the chat pane over here. Don says, what does your analogy look like in candle form? So on a stock trading candle, and let's just zoom in on one. Come on. Let's just take this one right here, this one towards the top. The high of this candle is $386.80. There it is. Right there, that's $386.80. You could buy right up there for $386.80. The seller up there was probably selling for $386.79, maybe $386.78. But we don't really know what the bid was. Usually the price of what's represented in the candle here is usually the ask. Sometimes it's halfway between the bid and the ask. Some softwares are going to do a little bit different. You can adjust the settings to be the ask or be the bid or halfway in between, however you want to do it. But let's assume for this video and this example that that's the ask. The low of this candle is going to be 373.83. The open was 378.53 and the close was 377.14. Sorry, I had to cough there. So in this 5-minute period, when the auction opened, the price of Netflix was $384.38 to buy. Netflix has huge volumes. And so since the market maker, actually we can tell in this 5-minute period, the market maker executed 8.639 million shares transacted. So with that kind of volume, the market maker probably doesn't need more than about 1 penny per share to make money in that time period, right? So basically in that 5-minute period, the market maker made almost $87,000 in a 5-minute period. Not bad, right? Sign me up. But the auction opened at 384.38, and I don't know exactly what happened in this 5-minute period, but let's just speculate that there were a lot of sellers, right? Because this thing was going up, and the sellers are saying, "Hey, it's time to sell, woohoo!" But or there's lots of buyers going up. Sorry, lots of buyers, and the sellers are thinking, "Hey, the price is up. I'm ready to sell." And so the market maker was like, "Hey, who wants to buy it at 384.38, and who wants to sell it?" And there was a certain amount of people of each side that said, "Yeah, we'll do it." And then the market maker slowly raised the price all the way up to 386.80 and said, "Okay, who wants to buy at 386.80?" And there's a few people that raised their hands. And who wants to sell it up there? There's a lot of people that raised their hands. We want to sell it, but they couldn't, right? There was really there just wasn't enough sellers to meet all the buyers. So a few people got executed up there, and then the market maker is thinking, "Wow, I got a bunch of sellers. I got a bunch of sellers here. How am I going to get people to want to buy it when I got all of these sellers?" And so I said, "Well, okay, let's lower the price. What if I get down to 385, right? If I get down to 385, and a couple of people said, "Okay, I'll buy there," and some of the sellers got filled. Well, I still have a whole bunch of sellers, but I don't have any buyers. So let's lower the price and make it more attractive for the buyers. And so as the market maker lowered the price, there were some buyers that came in, and we got all the way down to the bottom of this wick here. And we are, let me get some of these drawings off the picture, make it a little bit cleaner. So we're down here at that bottom wick, and that is at 373.83, and the market maker said, "Okay, who wants to sell?" And there was only like 1 or 2 people that wanted to sell. And I'm saying people, but realize this is shares. And there's only a few shares executed, and there were people saying, "Okay, I want to buy it," but there's no more sellers. And so then the market maker said, "Okay, well, I'll raise the price, and we'll see if anyone wants to." Yeah, there were a couple of sellers. There were a couple of sellers. There were a couple of sellers. And then the 5-minute period was done, and we jump over here to this next candle. Actually, no, it jumped up to there for that next candle. And so, Don, let me know if that answers your question. But basically, that's just kind of how it works. When there's more sellers than buyers, the market maker is going to lower the price of the stock in order to satisfy those transactions. Jenny says, "How do they handle market orders?" Jenny, this is exactly why we don't do a lot of market orders. But basically, if you put a market order in, the market maker over here, market's going to be like, "Oh yeah, I will fill you at whatever works best for me, the market maker." Now, there is a fiduciary responsibility for the broker, and they don't do this very much anymore, but when I was getting my licenses, they basically said the broker can get you filled at whatever the broker thinks is the best price. So unless things have changed since I got my licenses, the broker can legally hold your order all day long before you get filled. Nowadays, brokers, they just want the commission. So you put your order in, you will get filled at the next market price. So let's say you are here and you say, "You know what? I want to buy Netflix." And when you submit a market order to your broker, you're pretty much saying, "I don't really care what the price is. Just buy it." And fortunately for you, you put your order there and the price was going down and you got filled right there. Woohoo, you got in lower than where it was. But maybe you're a seller and you're like, "Oh, you know what? It's going up. Now it's starting to go down." And you say, "Hey, I want to sell." And the market maker says, "Well, I don't have any buyers until I get down to here." So that's where you're going to sell your order. So you get triggered down there. That's why when we are exiting, we use stop market orders, which pretty much says maybe we had a stop market order there. And as this thing was going down, we said, "Oh, that's not going up anymore. I want out." And, as long as I can get out in here, that's so much better than holding on to it and getting filled down there. So Jenny, you've got an interesting point in that there are limit orders floating out there, right? And if I have a sell limit that says I want to sell it here or higher, I got buy limit orders out there which say get me at here or lower. I've got buy stop orders that say I'm okay anywhere up here. I've got sell stop orders that go anywhere down in here. And the market maker is going literally millions of shares every 5 minutes for Netflix, just trying to figure out where they can line up buyers and sellers. And if they can't, then they move the stock price one way or another so that they can get a meeting between buyers and sellers. How many of you guys, I know I've done it, you've had a limit order out there and it didn't get filled, so you adjusted it just a little bit, and then you adjusted it just a little bit, and then you adjusted it a little bit, right? Maybe you had a sell limit on Netflix right there, and you're like, ooh, I didn't get filled. I'm gonna lower it to there. I still didn't get filled. I'm gonna lower it to there. Whew, finally got it. Right, so the market maker has a list of selling orders and a list of buying orders, and they are going as fast as they can, trying to line these people up, adjusting the price of the stock so that these people can get filled. If you've ever heard of level 2 data, level 2 data is the list of the sell orders and a list of the buy orders. And it goes really, really fast. But what some people like to do is they study the list of sell orders and list of buy orders, and they look at the prices of some of the really big shares. They say, man, on Netflix, there's a lot of people that are trying to sell this at 340 bucks, which is right about where we are today. So if I own shares of Netflix and I'm trying to dump them today, I'm going to probably go in at 339.98 or 339.88. I'm going to get before that 340 group, because as soon as that 340 group starts getting filled, that's when a lot of sellers are going to go in. In order to match those sellers, the market maker may be lowering the price. And kind of similarly on buying. If I see a bunch of buy orders at a certain price, there's a good chance that the market maker may adjust the price so that they can go up and get filled on those. Brian says, how much do they make in a day? Just depends on the market maker. It depends on the stock that they are making a market for. Most of these market makers, I do not think of being as poor people. Now, we've been talking about shares of stock. A lot of these are computers. In the options world, a lot of them are real people. And so if you have a bid-ask spread, a lot of times the person can fill the price differently than where the actual bid is, where the actual ask is. So if you're doing options, it's a whole lot fluffier, fruitier. It's less concrete than when you're doing stocks, but it kind of works the same thing, same way. I mean, if I've got a call and I've got the 350 strike call on Netflix that expires on October 19th, and I've got a bunch of people wanting to buy, I can raise the price of that to create sellers. And the options world is a little bit different, because sometimes the market maker will provide you, they will take the other side of that transaction just to fill you. But as far as stocks go, the market maker does not take possession of the stock. They just transfer the hands. Questions on how the market maker works for stocks? All right. Well, thanks for watching this video. Don't forget to check out reallifetrading.com for free stock trading education, including options if you want. And if you want for more videos like this, come over here to YouTube and do a search for Real Life Trading. And then you can type in after that your question. Maybe you got here because you typed in Real Life Trading Market Maker. But we have all kinds of free videos for you to check out. So swing on over, do that. Give this video a like, I'd appreciate it. Click the subscribe button. You guys rock. And as always, trade on logic, not on hope. Have a good one, everybody.